Welcome to Part 3 of Tax Planning Strategies for Real Estate Professionals. If you have not yet watched Parts 1 and 2, we suggest you go back and review Part 1 and 2 before beginning this part. This course is sponsored by RMS Accounting. RMS Accounting is a full-service accounting, tax, bookkeeping, payroll, and financial management firm, and by Royal Management Services. Royal Management Services is a community association manager for South Florida, managing condos, HOAs, and co-ops. The audio was recorded at a live seminar.
Capital gains rates. We have a 20% top capital gains bracket that we used to have. Now you have the investor rates, okay? That's regular income. Capital gains top rate is 20. If you're in the 10 or 15% bracket, you're going to be 0. So if I'm in the 10% bracket or 15% bracket, it's a great time to sell that property and take advantage of the 0 tax rate. Okay. If you're a high income taxpayer, including the capital gain, it's going to be subject to 3.8%. That's considered net investment income. So another thing that can sometimes deal with this, especially this and moving it, is that might be a reason as a seller I want to do an installment agreement. I'm going to sell you my property. I'm going to take $250,000 down on a $500,000 deal. I'm going to carry back paper for $250,000. With any luck, if I take the $250,000 this year, the next payment starts next year. That's all mine. And I manage, by the way I program this, to keep my income under the $250,000. So it's a great way to get an installment sale. I always tell my people that are wanting to do installment sale, as long as you get enough money down that it would cover if they don't pay, you're getting the property back. I love installment sales. I mean, I can usually get more interest. What are you going to do with the money? I'm going to go down and put it in the bank. Great, you're going to pay them. You know, now here's the buyer who will gladly give you 5%. Okay, because if he goes to the bank, he's going to borrow at 6 plus closing costs, or maybe he'll give you 7% because there's no closing costs. So installment sales, especially if I've got big gains, make sense because I can spread the income over time. And in many cases, for me as the seller, okay, I can get more return on my money than I would get elsewhere. Especially, I know the property, if I'm getting enough money down, you know, I wouldn't do it at a 5% down deal. But if I'm getting enough money down, you know, that might make sense. Dividends, okay, we went from the 15 to the 20% rate if you're high income. The qualified dividends, that used to be maximum 15, they're now 20%. They are also subject to this if you're up there. So, you know, if you're, depending on what bracket you're in, that's where you're going to be. You do get the 0 rate again for if you're in a 10 or 15. If you're low income, they're going to let you get away with that. Big question always comes up around here is how long do I have to keep all this stuff? Okay. Proof of business income, 7 years. So not only the 1099, but something that shows here's how much money I deposited in the bank. Because the IRS doesn't believe we're going to show them all the 1099s either. Show me all your bank accounts. We want you to account for all the deposits usually. Proof of business expenses, 7 years. A credit card statement or canceled check is not proof of an expense if it's not clear proof. Okay, it's really considered not proof. The IRS, if I've got a check or a credit card to Home Depot or to Office Depot, they'll usually won't ask me any questions. But Home Depot, oh, I went to Publix and I bought stuff. My clients, real estate clients, so I show up, they've got, you know, oh, it says on here Walgreens. No, you need to show what you bought. I had an attorney client a few years ago. I don't know who else here remembers Modern Age Furniture. We bought all this furniture at Modern Age Furniture, and the auditor said, I shop at Modern Age, there's no office furniture there. That type of proof is 7 years. 1099s you give to vendors, so if you pay somebody as a subcontractor because you paid them more than 600 or more, you need to keep the 1099s. Your logs, auto logs, material participation logs, 7 years. If you're doing payroll, that's a 10-year hold. Insurance policies, 5 years from the date the policy expires. Okay. Proof of deductions, 7 years. capital basis, this is my favorite. I sold the property. When did you buy it? I bought it in 1945. Okay, great. How much did you pay for it? I don't know, and I don't have any of the documents. We need to be able to come up with that. So 7 years from the date you sell it, not the date you bought it. Tax returns forever. Statute of limitations on tax returns. The audit statute is 3 years from the date you file it, pay the tax. The normal statute is 7, but the fraud statute is forever. And if you did, the problem is, the reason I use forever is because if you didn't file the return, the statute doesn't start running. So if the IRS says we have no record if you're filing the return, and you don't have a copy of the return to show you filed, there's no statute. So we typically keep them. Now, you don't need to keep all this stuff in paper. Okay, I have 2 buildings this size if I kept paper anymore. Okay, you can go out and buy a neat receipt scanner, either the small one or the big one, and scan all this stuff to PDFs, and then get rid of the originals. Most of the receipts that you get today, if you leave them on the dashboard, they fade anyway. Okay, so we scan everything. You can store it in the cloud, you can store it on a DVD. I will just tell you, make sure it's backed up in more than one place. Don't put it on the only hard drive that you never ever do anything with, and don't do anything. So back it up, use one of the cheap backup services that back up to the cloud, make a DVD, stick it in your fire safe, but have it backed up somewhere. Okay, but it's a great way to do it. As I say, everything here is paperless. We scan everything and keep everything. That's why I told you, bring in your insurance card. I don't have to have it in the warehouse anymore. Everything's scanned. Storage is cheap. For your clients, I'm buying a piece of property. If I want to get a faster write-off, I can get a cost segregation study. I bought this building for $500,000. Well, how long do I have to depreciate commercial property over? 39.5 years. Forever, right? Is all of this building commercial property? No, it had air conditioners. Air conditioning is 7-year property. It had kitchen cabinets, 7-year property. It had some 5-year, it has electrical systems. All cost segregation study says, yeah, you paid $500,000, but of the $500,000, $150,000 was air conditioners, and $200,000 was electrical systems that are in the building, and plumbing and what have you, and it gives us each of those so that we can depreciate those faster. Now, the big dirty secret is we depreciate them faster, which means you pay less tax today, or if it's a business property, you get a bigger deduction against your other income. Down the line, you're going to have less depreciation. So I'm making a lot of money today. I want the deductions today. Cost segregation works great. It's something you should talk to your clients about when they're talking about, do you want a cost segregation study? Are you looking to get faster depreciation? We can help you speed up the write-off by telling you about this. Go see an accountant about it. If I say I'm not really making any money now, but 10 years from now, I'm going to be in a much higher bracket and I want to leave the deductions for later, then I don't want to do this. 1031 exchanges, when we get back in the black, they're back again. So I have a property, this happens all the time here. I have 2 duplexes in Maine. I'm retiring to Florida. I don't want to have those anymore. But I love to rental. I'd like to have a duplex or a triplex in Fort Lauderdale. If I sell my 2 duplexes, which I've owned for the last 40 years, so I've depreciated them down to 0, I'm going to pay tax on everything. So I'm going to pay 20% tax on a $400,000 gain. I'm going to pay $100,000 in tax. I'm going to have $300,000 to invest with you. If I do a 1031 exchange, and I do it right, you have to go through all the action. I'll go through that in a minute. I sold it for $400,000. It's all gain. I buy the new one. I pay $500,000. I give them the whole $400,000 I had in property A. I take out a mortgage for $100,000, and I don't have to pay the tax until I sell my new Fort Lauderdale property. Okay? Now my mortgage, instead of having to have a $200,000 mortgage for this property, I only have to have $100,000, or maybe I bought it for cash. So it allows me to buy more, and in fact, it's not free, because when I sell the new property, I'm going to have to pay the tax. But it allows me to delay paying the tax, maybe forever, because I'm old and I'm going to die and my children are going to inherit it. It'll step up and their value will be what it's worth when I die. And they'll never have to pay the tax. Or maybe they're going to sell it when I'm in the nursing home and they'll have to pay the tax then, but it allows you, as the real estate person, to in effect show them how they can have a smaller mortgage on that property. Okay? Now, I'm not telling you to be the tax person. I would mention a 1031 may help you not pay the tax now and delay it to later. You need to find an exchange agent. We used to do it, we don't anymore because they've got to be separate from accounting. And an accountant that knows 1031s, they can't sell the property, put their money in the pocket and decide to buy a new one. They literally, when they sell the property, the way these things work is, I have the property, I have my property in Maine, I in effect transfer that property, and it's a paper transfer, to my exchange agent. My exchange agent takes the property from me and sells it to you, takes the money, puts it in an escrow account. I then identify your property to the exchange agent, they buy your property, and then transfer it to me. And that's a simple explanation, a little more complicated. But there are time deadlines and constraints and identification, so they're complicated, but they're much cheaper than they ever were to do. When I used to do them, we got 3% of the gross deal, and we got to hold the money. And today, I can get exchanges done for $2,500 by a qualified exchange agent. Your client can buy a bigger property with less cost and be profitable faster because they're in effect using the money they would have paid taxes with. So for somebody that's looking to move from one property, now it has to be like kind, rental for rental, but I can trade a commercial rental property for a residential rental property or vice versa. I can even take one property and identify 3 properties. Okay? So just be thinking about it when somebody tells you I want to get rid of my property. It may make you the guy they talk to because you're giving them solutions that somebody else isn't. Okay? Older clients, putting real estate in a trust avoids probate. The only ones that do well at probate are the lawyers. Okay? We have most of our clients' properties, they're in their revocable living trust. If they want to take it out, fine. But we don't have to go through this whole, when somebody dies, transferring the property and getting a judge and a lawyer, and it becomes very easy. So that's somebody that's doing it. If I'm buying a piece of property and I'm thinking about getting a trust, let's get the trust today. Let's not buy the piece of property because we will have the expense of retitling it twice. And most banks will let you put it right into, they'll even do the mortgage in a revocable living trust. Foreign property owners need to apply for a withholding exemption early, okay? They are not, I have a client that I'm now filing the 1040 NR for, and he's all upset with me because you handled this for me. Well, the IRS sent a letter, they're supposed to respond to these in 90 days, and they haven't done. They sent a letter saying, thank you very much, we're processing it at the end of 90 days. The title agent holding the money said, I'm not holding it any longer. The letter doesn't, it said, we'll get back to you. I said, the letter says they'll get back. He said, I want a letter from them telling me I can hold the money past the 90 days. So they need to make sure that they make arrangements so they're going to have withholding if they're a foreign person selling a U.S. property without a U.S. tax ID. Don't overlook the obituaries. I love the obituaries. Property step up in basis when somebody dies. So a lot of times family members don't know that, and if I were in the real estate business, I would be saying to whoever's now in charge, hi, I know mom owned that condo or that house, and because she died, you're going to need to know what it was worth on her date of death, and I can give you an estimate of value, and it won't cost you anything, and that would get me in the door, because when they show up the accountant, we're going to say to them, we need to know what the property value was worth. From an independent realtor that says this is what it was worth on June 3rd when mom died, okay, I'm going to use that, and I'm going to tell them if they sell it for more than that, they have to pay tax on the gain. If they sell it for less, they get to write off a loss. And I just think it's a great way to get in the door with these people, and I wouldn't even tell them I want to list the property. I would just be saying, you know, we know that when someone dies and they own property that they're going to need a cost basis, and we make it available as a free service to our, to people. No obligation. If you have to, we'll send it out, but it'll get you in the door to see them. Probably get you in the door to see the property too. So that's just something that I would look at, Listen, what it's worth on the death, they need it, they got to determine it, they need to know. They don't have to recapture depreciation. Forgiveness of debt, the good news is if you sold your principal home and you lost money because it went down in value, the bill they signed said you don't have to pay the tax on it. Now, if it was the second mortgage that you went out and borrowed so that you could take that Las Vegas vacation, to pay off your credit cards, that's a whole nother story. And there is tax on forgiveness of debt, credit cards, that type of thing. But this exemption came back. It's what we call the not hitting them while they're down. I just lost my house, and I'm not going to get anything out of it, and now you're going to tell me I have to pay tax on the money I'm not going to get. So we're real happy that's back. It'd be nice if they would have put it in for more than 1 year at a time, but you know, we can be hopeful. Foreclosures of non-principal residences foreclosure is the same as a sale. Somebody foreclosed on your property, there's a sale, you sold it for what the mortgage is, fair market value. There are lots of tax consequences, and people need to get somebody that understands and knows how to deal with foreclosure. The weird thing is that sometimes the foreclosure is in a whole different year than the forgiveness of debt. So you've dealt with half of it, and then you get this 1099 for cancellation of debt, and they're trying to figure out, where do I have income from? Well, the bank finally wrote it off. Okay, on the end here, when you're choosing somebody to do your taxes, I used to teach this for accounting groups all the time. I used to tell accounting groups that it's malpractice to let a client drop off an envelope of stuff and then have them pick up a tax return with a bill on it telling them how much they owe you. And it's malpractice because if you knew everything that was supposed to be in the envelope, you could do the tax return and you wouldn't need them, okay? The tax interview, the tax return is supposed to be give and take, where you sit with somebody. I have clients all over the world at this point, and even our clients in Belgium that we do U.S. tax work for, we have an hour telephone interview, okay? Some of them are by Skype, my California clients. They may not come in, but I've got all their paperwork. We spend an hour on the phone. We go over what happened this year, what's going to happen next year, did you have this, did you not? We go through a lot of these checklists. You really need to get somebody that you can relate to and that will sit down with you and talk to you. My other pet peeve is if every time you call, you're going to be more afraid of getting a bill than getting the right advice so you don't call. When we do a tax return, if I do your tax return, if you need tax advice during the year, we don't charge for it. Because I got tired of telling people, yeah, all you had to do is call me and you wouldn't owe this $10,000, but you figured you were going to have to pay me $75, so you didn't call me. So we include it in our package, but you need to have somebody that you can talk to, that you can run ideas by, that you can sit down with, and they need to be willing to spend time with you. And if you don't have that, then you should look elsewhere. The other thing is we don't all fit with everybody. I told you my wife has all of the old clients. That's because old people like her better than me. You need to find somebody that you can relate to, that you're comfortable with. In the accounting world, it's not, this stuff is not that complicated. Everybody wants, in fact, in accounting school, they tell us, lawyers tell us how to make it sound like it's, if you tell them it's complicated, they'll pay you more money. No, you may not be able to do the calculations, but if I can't explain to you in simple English what it means to you and how it's going to affect you, if I can't explain to you what the decision is going to be in simple English so you can understand, that means I failed to do my job, not you don't understand. I'm saying they have to be able to explain to you why, how, and where in a way that you can understand it, or you need to find somebody else that you can. There's nothing wrong with saying, he does a great job, but I'm not comfortable when I call that he really wants to get doesn't want to just get me off the phone or get where I want. And that's really important. Okay, your professional should be helping you find deductions and things that you overlooked. Okay, it's about asking questions. You'll note when you get on an airplane, anybody ever seen the checklist the pilot goes through? Accounting is, okay, we have to know a whole bunch of stuff. And I'll be honest, I do 600 returns during tax season. And I see those 600 people. Okay? Would it be easy on Thursday night for me to forget to ask, whether or not you have any other dependents? Do you provide support for your mother, father, sister, brother? Yeah, but if I got a sheet I got to check it off on, it makes it easy to make sure, and it's to run down to make sure that everybody, because no matter how simple you were last year, doesn't mean something didn't change this year. And no matter how complicated you are, doesn't mean something did not change. So that's really important. If you're not doing tax planning, you're not getting your money's worth. All our clients get a letter in November, we do it for free. Anybody we did the prior year's tax return saying, you know, if you've had any changes, and gives a bunch of hints, you need to come in, we can talk about tax planning. It's free. Book your appointment between now, book your appointment between now and the end of the year. Okay, it's free. If you show up here in April and I sent you that letter and something happened that we could have done something about, I'm not going to feel guilty. Okay, because I gave you an opportunity to come in and you need to do it. Websites, you probably should take a look at the forms I've given you, and a bunch more are on our website under useful forms. So, you know, you want a simple trust or something, I mean, not complex, there's some stuff on there, or healthcare proxy or that. IRS.gov and healthcare.gov, you can go in there to see whether you are entitled to an exemption if you didn't do healthcare. If you do know anybody looking for community association management, we do that. So that's the shameless plug, as well as we own Bookkeepers Now, which handles bookkeeping for many different types of businesses.